Welcome to the Riskwiser Zone, the show where we dive into the latest news and trends from the world of stocks and finance. We're starting off with the story that's making waves in the automotive industry. The Canadian government has made a deal with China to allow Chinese-made electric vehicles into the country, and this move is putting trade negotiations with the U.S. at risk. According to Brian Kingston, CEO of the Canadian Vehicle Manufacturers Association, this decision further complicates what's already become a very challenging discussion. His group represents major American automakers like General Motors, Stellantis, and Ford Motor Co., which have plants in Canada that produce vehicles for the U.S. market. This development has sparked concerns about the potential impact on trade relations between Canada and the U.S. U.S. President Donald Trump has threatened Canada with 100% tariffs if it makes a broader trade deal with China, although the Canadian government claims it has no intention of doing so. The situation is complex, with Mexico also raising tariffs on Chinese cars and other goods to as high as 50%, which may have implications for future trade negotiations. We'll be keeping a close eye on this story as it unfolds, and exploring what it might mean for investors and the global economy. It's a reminder that trade policies can have far-reaching consequences, and that companies and countries must navigate these complexities to stay competitive. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, where we dive into the world of finance and economics. Today, we're looking at a trio of stories that caught our attention from the Japan Times. First up, a former Japanese currency czar, Tatsuo Yamasaki, is predicting that the yen will strengthen as investors gain a clearer understanding of Prime Minister Sanae Takaichi's fiscal stance. This comes as no surprise, given the market's tendency to reward responsible fiscal approaches. Yamasaki also believes that joint currency intervention with the United States is unlikely, which could lead to further yen appreciation. Meanwhile, Germany is struggling to come to terms with China's rise as a major business rival. The country's exports to China fell by 9.3% in 2025, while Chinese exports to Germany have surged. This China shock is putting pressure on German companies, both big and small, as they try to navigate evolving commercial ties. Chancellor Friedrich Merz's upcoming visit to China will be closely watched as he seeks to address these issues and find a way forward for German businesses. In other news, PayPay, Japan's largest mobile payment service, has filed for an initial public offering in the United States. The company, which is a subsidiary of SoftBank Group, is looking to list on the Nasdaq exchange, with the timing, number of shares, and price range yet to be determined. This could potentially be the largest ever IPO by a Japanese company and will be closely watched by investors. These stories highlight the complex and interconnected nature of global finance and economics. As we've seen time and again, events in one part of the world can have far-reaching consequences elsewhere. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's dive into a fascinating tale of tariffs, trade wars, and their impact on the economy. The recent analysis from the Federal Reserve Bank of New York has shed some light on who bears the burden of tariffs, and it might not be what you expected. According to the study, nearly 90% of President Trump's 2025 tariffs were passed on to U.S. consumers and businesses in the form of higher costs. Now, this finding seems to challenge the administration's view that foreign companies and exporters pay the lion's share of tariffs. The data suggests that U.S. importers bore around 94% of tariff costs from January to August, and even by November, they were still shouldering about 86% of the burden. This raises interesting questions about the effectiveness of tariffs as a tool for trade policy. The White House, however, defends the tariffs, pointing to solid economic growth and low inflation. They argue that the president's economic agenda, including tax cuts, deregulation, and energy abundance, has led to reduced costs and accelerated economic growth. But with the Supreme Court expected to rule soon on the president's authority to impose levies under a federal emergency powers law, the future of tariffs is uncertain. If the tariffs are struck down, the U.S. government could owe businesses as much as $188 billion in refunds. This would be a significant development, and investors should keep a close eye on the situation. As we've seen before, trade policy can have far-reaching consequences for markets and economies. In conclusion, the world of tariffs and trade wars is complex and multifaceted. While some argue that tariffs are a necessary tool for protecting domestic industries, others see them as a drag on economic growth. As investors, it's essential to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.